Hello traders, today is the 22nd of March 2013 and the time in London is 10:21 a.m. Right here in New York is 6:21 a.m. Happy day trading to you all. This is the second part of the video that we titled how to day trade using the wave principle. This is how to day trade using the wave principle, part 2. If you have not watched the first part, you may do so before watching this second part. This will allow you, okay, to follow us and understand what we are talking about here. Okay, the video is posted at www.youtube.com/24 Elliott Waves. Okay, that's the 24 Elliott Waves channel on YouTube. Okay, how to day trade. Okay, using the wave principle. We have counted 5 waves, so we started everything here. In fact, I'm going to refresh your memory very fast so you may know. We were counting wave, talking about how to count Elliott wave. We have counted 5 waves up to this point right here. Alright, so I'm going to highlight this section with blue vertical lines. The second one is here. So if you remember clearly, we started everything from here on a 3-minute chart and we have counted 5 waves. Okay, we have noticed that these 5 waves in this session in fact is the 3rd Elliott wave, all right, of this bigger, okay, cycle. All right, it's a bit funny wave here because of a bit of distortion in this session here. Okay, there was some economy news here, that's why we see the first wave went all the way here. Normally it should stop here, so we counted first wave, okay, second wave, and the 3rd wave up to this level here. And we had what we call in this session here, you can see, was a flat correction. In fact, I was telling traders that the price should come here. Can you see you see this green spotlight? I'm trying to... Alright, you see this small one here? Okay, that's where I was telling traders that the price has a high chance to come here to break below the low of the A corrective wave of the flat correction. You can see that when New York was about to open, New York was not prepared to buy high. So it was funny because New York push it down more to buy, okay, at the best place, because there was a kind of you see where we had the double zigzag A, B, C, X, A, B, C. Alright, watch the first part of the video so you understand what we are talking about. So New York was about to open somewhere here, okay, yesterday. So exactly where I put my vertical line now on this candle. So New York said no, London, we know that we should buy, but we don't want to buy up here, we want to buy it low. So they push it down to this level. Alright, right here, and from there they took it up. Okay, you can bet the will. But now I told you traders yesterday, you remember this is our target here. It's a target. You can see that when New York took it, they took it up to this level, and then there was no more momentum and the price was stalling. So the game is still on. That's why I say to traders, do not forget your patterns, and the market is open to them. We will expect it, okay, because the professional are aware of it. We expect it to come to the turquoise horizontal line, which is the target zone. If you want to know how we detect this target, we were using the pivot line, okay, price moving from M2, okay, to M4. This level here, that's the M4 of yesterday, and we didn't forget that level right here, and we were using the Elliott wave pattern. So when we started everything, we counted 5 waves from here. There was this on the 3-minute chart. We see this declining channel. Looking at our left hand side, there was a bearish trend. That bearish trend was kaput. Price gave the first higher low. We counted that first wave, and then the second wave. We explained everything to you. It ended up being a complex second wave, ABC, X, ABC, followed by the 3rd Elliott wave up to this level. All right, and then we have also, okay, pullback, which is the fourth wave, and then the fifth wave ended here. And then we have in fact, it's not easy to see on this chart the fourth and the fifth wave. We go back to the 3-minute chart. Hopefully I can see everything because we want to zoom into the price. You see the minor third area wave, okay, it's the turquoise line up to this level. There was a small tiny pullback followed by the fifth wave up to this level. The red line here, that's okay, the A corrective wave. You see that the B corrective wave or the flat correction was A, B, C. When above the high of the motive wave, alerting us that we are likely to have a running flat correction or an expanded flat correction. Watch the first part of the video, you understand what I'm talking about. And in fact, we had, okay, an expanded flat correction. My target was here, but New York pushed it down more, all right, to bring it down to, okay, this place. And then from there, we are now expecting the price to come to this level. As London opened today, you can see that the professional, in fact, the price went down a bit again. You can bet because they don't buy high. These people don't buy high. They are trading with millions. They don't trade, okay? They want to make money. They are smart. So if you see now, a lot of, I'll show you something that is happening now. A lot of traders, that's why I say to trader, it's so important to understand the wave principle. You see, right here, trader will say, a lot of new trader will say double top, okay? Yes, it's a double top. But check the time now. The time is 10:27, okay? When you're going to trade any double top or double bottom, wait for the candle, at least if you are day trader, wait for the candle on the hourly chart to close. Even if you see that a 4-hour candle is about to close, wait for that candle to close first. You'll notice. Another thing that you can do, because people are using the double top, the double bottom, like the way traders are trading the same, they overbought stochastic, they oversold stochastic. People say overbought, they sell. Oversold, they buy. No. Same thing when you see a double top, just draw a warning line. You see, if you do that, if you, like here, if you think to sell now, because you don't know about this target level, so you draw your warning line, okay? So you want to take a tiny risk, so 15 pips, sell it, okay? Because you don't know what's taking place, all right? So there's a better way to trade the double top and all these things. And the GSTW24 traders know how to enter this kind of trade. So now you have your warning line because you didn't know that there's a target here, all right? Another thing you can do, because you don't understand what's taking place, draw a channel like this, okay? A common set trend line like this, and wait for it to be broken first, at least. So far, you see, that common set trend line is in place. So, you don't sell it, don't force it, okay? You can see some traders are selling, you see, they sell down, but professionals knew, they just laughing, they say, no, guys, and it's going to go here. There's a high chance, not certainty, but there's a high chance they will bring it here. 13230. Sometimes the professional gets so upset, which means the big players, all right? They get so upset, and sometimes the pattern may fail if, for different reasons, the target may not be reached, or the target may be distorted for a while, okay? They allow, okay, the mass, okay, to do what they want to do, but later on, they will bring it back here. No one knows how long it will take. But as you can see here, since yesterday, we were using the Elliott wave principle to forecast the price, but we didn't try to impose the forecast on the market. But we were, okay, waiting for the price to confirm the pattern. And we seen it. And now we are approaching our target level. When we were here yesterday, I was telling traders that we are likely to, the price may go down. Look how it went down, big time, all right? A lot of stochastic traders, their stochastic was oversold. They were buying. These traders were losing. It's so important to learn to master, okay, the Elliott wave. If you are a new trader, you start with the indicator. Thoroughly understand every indicator. The MACD, the stochastic, the RSI, the CCI. you must understand how to use this tool. If you don't know how to use them, you will be using them, okay, wrongly. That's not the best way. After you finish with the indicators, the first thing you need to put into your mind that the price is the number one indicator. The indicators will give the warning. Price must confirm the warning. The price must give the signal. From there, you move to Elliott wave, www.24elliottwave.com, or on YouTube or on Google. Learn the subject of Elliott wave. After that, or at the same time, learn the Fibonacci projection and the Fibonacci retracement. Thoroughly understand it. Don't learn it like a theory. Understand why. You see, that's the difference between the experts and those who are ordinary traders. The experts understand why the price is doing what the price is doing, why the price is displaying higher lows, higher high, why the price is displaying lower lows, lower high, why one should buy, why one should sell. Try to start asking that question, why? And once you know why mark the course above a signal line is bullish. Because when mark the course is above a signal line, it means that the price, okay, has broken above, okay, a bearish trend line. But do not buy. Wait for the price to retest that bearish trend line. So you start asking this question, you are likely to start trading like a pro. The why, okay? Why should we sell here? All right, why? Okay, price display double top. Well, how do you trade a double top, okay? What's the meaning of double top? Double top is likely to take place at a resistance level or at a conversion point. There's another better place here. All right, and then you take it step by step. All right, so the cycle has started here where I put the green spotlight, which I explained in the first part of the video. We can see that there was a distortion because there was some economy news here. You see there was a distortion first, which the price has rectified, cancel it completely. I talked about it yesterday. I don't want to dwell on it anymore. And then the price started going up. You can see that this first Elliott wave, some traders may disagree. That's okay, but it went too far. All right, you can understand there were a lot of volatility here. It went too far. All right, I believe this kind of movement here is a distortion here. The top one here should be just here. It happens. If anyone say to you, okay, the market is not distorted, when you are counting the wave, you should be able to detect where are the distortions and why we have a distortion. Sometimes a lot of traders find it very difficult to count Elliott wave because they don't understand the distortion that are coming to the market. And sometimes, for instance, a wave is cancelled, traders are lost. They don't know what to do next. Or a distortion has taken place, one must highlight it. We talk about all this at www.24elliottwave.com, and this is the challenge. But the key point when we are counting the waves, we want to get the direction right. All right? We want to make sure we get the direction right, because if you think that the price is going down, but the price going up, that's a big mistake in the wave count. All right? So the direction is the key point for us. The trend line can help you. The channel will help you to determine whether the price is going up or going down. And also understanding the definition of the uptrend and the downtrend will allow you to, okay, to become a better wave counter. Another thing that one can understand is that the wave principle is fractal. 5 waves on another time frame can be just one single wave on another time frame. As I show traders, this 1, 2, in fact, 1 from here to here, and 2, which was a double zigzag in this session, messy. You have to accept that because we're on the 3-minute chart, followed by the third Elliott wave and tiny 4th wave and the 5th wave up here. This move, which I highlighted with the pink, is in fact, the 3rd wave of the bigger cycle. But always we don't say the cycle, a cycle, because one cycle can be a minor cycle of a bigger cycle. All right. So if we understood that suppose there's something here we don't understand, as I showed traders yesterday, we went to the 50-minute chart to see the bigger picture. And sometimes things will become clearer as you are switching time frame, understanding that a wave on one degree can be a minor degree, a minor wave on another, okay, lower time frame. So you are switching time frame, you understand the wave principle, you know the why and how and the when of the wave and the cycle, and you want to become experts. The expert want to understand, that's the difference, okay? Ordinary people just want to know, but the expert want to understand why, how they can handle it. They ask, why if this situation arises, how do we handle it? The expert want to know, because they are the expert. When things get too complicated, they call them over and they handle it. The same thing, if you are, whatever you are doing, you are learning, try to master it properly. You can learn to master MACD alone and trade MACD like a pro. You can learn to master CCI, RSI, or the Bollinger Band and trade it like a pro. You can learn only the Elliott wave and be expert in it. But at the end of the day, what's the difference? The difference between the smart traders and the ordinary trader is that the smart traders understood that it's all about value, all right? You want to buy something, you want to buy low, but you want to make sure that it's quality. So something that is a high quality, suppose gold right now is $1,600. Suppose suddenly somebody is willing to sell you the same quality of gold at $300. You must be mad not to go and get the money to buy it, all right? It's discounted. It's happening in the stock market. That's why the smart money all the time, as I showed you here yesterday, I explained to traders that New York, if the market is about to go up, and it was going up during the London session as it was yesterday, and New York, all right, is open, which is somewhere here, all right, New York will not buy high. New York will prefer the price to go down. As the future market opens before New York, all right, you see, they want the price to go down. They want the price to go down. And look, it came down. It's happening all the time. From there, a lot of traders will think that now the pound is going down. It's not going down. It's going up. But it's just because the small money is so obsessed to buy at the best price, okay, and they bring it down first. And then from there, you see, since then, it's stuck here. Myself, yesterday, I bought the pound. The price went up. I sold it. It went down. And I bought it again. It went up fast and started pulling back. I took some profit. I watched the market settle. During the Asia session, I bought it again around here, 15180, this zone. I placed my stop loss below this 16160 because of the congestion here. And again, I took nearly 20 pips again this morning because I knew that these people were going to waste our time, the double top people, the high frequency traders. They were selling here. High frequency trader, double top, sell, doesn't matter. They just sell, okay? That's what they're doing. So I don't want them to waste my time, but we will see slowly but gradually. Now the price coming down. I'm not interested to sell here. If they manage to bring it here, we will see, all right? If they manage to bring it here, that's a target zone. We are talking about convergent signal. Very often, lots of traders that are trading the target zone. So the target is here. What's going to happen? As soon as the price reaches the target zone, a lot of bearish traders that understood the target level will start placing trade to sell. Okay, so they start coming in, selling, placing order to sell. What I say to traders, do not sell before the big elephant. Do not sell before the lion. The lion will get its big share before everybody else. You may say it's unfair, George. Well, that's the reality of the market. How much money do you have in your trading account? Some are trading billions. So these are the elephants. Wait for the elephant to come in first before you place your trade. So here, a lot of traders, as I put it here, they will be placing trade. And I can tell you now, and if it happens, I may record how to day trade using the Elliott wave principle per trade. But, okay, I do not promise that now. So as traders start selling here, well, what's going to happen? You know it. Probably go up a bit, okay? There's another level here. 261% Fibonacci extension level. This is the dotted line here. They will bring it here. That's where the smart money will sell. The smart money will say, we will see whether they will do it or not. Sometimes they may not. But the smart money will say, George, well, if you want to sell, why don't you sell at the best resistance level? The 261 is here. Why don't we bring it here instead and sell it here? So what I'm going to do myself, as I see the price arriving at a destination, so these people here will be trying to sell. You see selling price will go down a bit. And later on, the smart money will say, no, we don't want to sell here. We know we should sell, but we want to sell at the best, at the highest price. So they bring it here instead. 15250, call it 15250. And if it reaches that level, myself, I'll be looking for opportunity to sell. All right, you see now? So if we want to use the wave principle to forecast the market forecast is a trading plan. We must not impose the forecast on the market. The mistake that a lot of Elliott wave traders are making, what we have seen, a lot of traders, because the subject of the wave principle is a very exciting subject. And when traders start learning it, they love it, which is understandable. You must love Elliott wave. You love it. Yes, you will love it. Now, they try to use the Elliott wave like a science to impose it on the market, and sometimes it doesn't work. The problem is that a lot of day traders are technical traders, and the smart money knows that. Now that we see more and more hedge funds coming to the market, a lot of ordinary traders are obliged, okay, now to start going to Google Finance, to Yahoo Finance, to Bloomberg, to use the fundamental, because the smart money are paying attention to the fundamentals. The dominant force, remember the dominant force follow the dominant force. So, because these traders are technical traders alone, they don't bother to do any homework, they don't bother to check the economy news. They go weekend, they spend most of their time checking technical alone. All right? They don't want to know whether the company is about to pay a huge sum of fine. All right? They don't want to know, okay, whether they have a analyst forecast, okay. They don't want to know anything. They don't want to check the economy news. They just want to switch up because it's the easiest way. I say to traders, combine both, all right. Okay, I will, we can see now, you see, we are on a 15-minute chart. If we go again to my favorite time frame, a 3-minute chart, all right, you see, people are selling here. You see, these are double top traders. We can understand they didn't make a wrong decision, okay? But if they have to draw this warning line, you see the warning line here? In fact, I will call it my warning line, okay? Again, into pink here. And you can see here, if you do that, so you sell because you think it's a double top, and you roll it down, okay? If you go back above this line, don't give away too much pips, come out, all right? Because as a day trader, you don't want to lose too much. You are not swing trader, all right? You are a day trader. And you will see it as she now, but display equal high, display lower low. Well, if it's truly bearish, all right, we must see a lower high. If it failed to display a lower high, it's telling us that that bearish momentum is not sustainable. Traders are selling here right now. All right. So far so good for people who are selling here. All right. Okay. The high frequency traders set their computer in a way that when they see a top and a top, the computer will sell. We see all the time. Pay attention. All right. Go to the lower time frame. You see these are high frequency traders selling here. But the smart money does not forget that there is another target level. All right. We will see whether the target will be reached to them. And if it's happening, I'll post another video and we will talk about how to day trade using the wave principle per trade. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders. Speak to you soon.